Today is March 2026, and the world's financial markets are facing a massive shock that started just 20 days ago. On February 28th, the U.S. and Israel launched joint military strikes on Iran. Iran's supreme leader was killed in the attacks, and Iran hit back with missile strikes on Gulf oil depots and U.S. bases. The result? The Strait of Hormuz, the narrow waterway that carries about 20% of the world's oil, is now effectively closed. Right now, Brent crude oil is trading around $102 to $108 per barrel. Some reports show it hitting highs near $115 recently, but it's fluctuating between $102 to $108 today. That's a huge jump from February's level of about $72, over 40 to 50% higher in just weeks. WTI, or U.S. oil, is in the $95 to $100 range. In the U.S., petrol prices have crossed $5 per gallon in many places. In Europe, natural gas prices are up 20 to 30%. Global stocks have dropped about 5.5%, with Asian markets hit hardest. This is just the beginning. In this video, we'll explain the full financial impact of the Iran war on oil, stocks, inflation, central bank policies like the Fed, gold, commodities, and especially how it affects everyday people in Europe and other major economies. This topic is trending everywhere because investors, traders, and regular families want to know what happens next in the next 3 to 6 months. So hit like, subscribe, turn on notifications, and let's dive in. First, let's understand the basics. This wasn't a full war at first, but the February 28th strikes changed everything. Iran blocked the Strait of Hormuz, and oil production from Gulf countries dropped sharply from about 6.7 million barrels per day to as much as 10 million lost. The International Energy Agency, or IEA, called it the biggest supply disruption in history. Trump said the war would end quickly, but we're now in the third week, with more attacks hitting energy sites. Energy markets are in chaos. Headlines from Al Jazeera, Reuters, CNBC, and Bloomberg all say the same thing. Iran war hits global economy hard. The biggest hit is to oil and energy. Brent crude jumped 13% in a single day early on, briefly hitting $82, then crossed $100, and now sits around $102 to $108, with some spikes higher. Goldman Sachs says this is a 70% surge in a short time. With the strait blocked, up to 15 million barrels of daily Gulf supply could be cut. In Europe, natural gas prices are surging, and winter stockpiles could run low, risking another energy crisis like before. In the U.S., petrol is over $5 per gallon, pushing up trucking and transport costs. Analysts warn if the war lasts 2 to 3 months, Brent could reach $150 to $200, according to Wood Mackenzie reports. Short-term supply is tight. Long-term, Saudi Arabia and UAE might add extra production for relief, but the blocked choke point is the main problem now. For Europe, a big energy importer, this is a double blow. Higher fuel costs mean more expensive heating, electricity bills, and transport. Food prices rise too, because fertilizers and farming depend on cheap energy. Supply chains are breaking, shipping costs are higher, some airlines are canceling flights, stocks like IAG and EasyJet down 4 to 6%. Now, stocks. Global markets lost about 5.5% since the war started. European indexes like FTSE 100 are down 1 to 2%. Asia hit worst. In the U.S., S&P 500 recovered some early losses, but energy stocks are up. Defense names like Northrop Grumman and RTX gained 5%, while Dow and Nasdaq hit month-low lows. Why? Investors are in risk-off mode, running to safe assets. Uncertainty from the war plus other issues like tech cases boosted volatility. Defense and energy companies benefit, but airlines, consumer goods, and auto stocks are falling hard. Inflation is the scariest part. The oil shock could add 0.5 to 0.6% extra to headline inflation, Goldman Sachs estimate. Europe and Asia, big energy importers, feel it most. The U.S. Federal Reserve held rates at 3.5 to 3.75%. Before the war, people expected 3 to 4 rate cuts in 2026. Now, Goldman Sachs says cuts might delay to September-December, maybe only one or even none. Fed Chair Jerome Powell said Middle East developments have uncertain implications, but oil prices will push inflation higher. Analysts from EY and others warn the Fed might not cut rates or even talk about hikes if inflation stays high. In Europe and other places, central banks face similar pressure. This raises stagflation risks, high inflation plus slow growth. Gold and silver are volatile but rising overall due to safe haven demand. Aluminum prices surged from supply issues. Copper dipped early but recovered. Energy commodities are winners, others are mixed. Impact on European countries and global. Europe is feeling the pain badly as a major importer. Petrol and gas prices are way up, higher transport, heating, and living costs. Import bills rise, trade balances suffer. Stock markets fall, investor confidence drops. Inflation jumps, making everyday items more expensive. Factories and businesses face higher energy costs, slowing growth. Europe's economy was already fragile. This war adds big pressure. Food and goods get pricier fast because of energy links. What should investors do? Short-term, stay in cash or short-term safe bonds. Buy selective oil and energy stocks, big producers. Gold or silver ETFs are physical as a hedge. Defense stocks if you can access them. Long-term, if the war ends in 1 to 2 months, as some signals suggest, oil could settle back to $80 to $90 and markets recover quickly. Analysts from J.P. Morgan and Morgan Stanley say prolonged conflict means higher inflation and recession risk, but a fast end brings quick rebound.
The takeaway? Awareness is power. Track your spending now, see where energy hits hardest, and trim there. Build a small emergency buffer if you can. Think about skills or side hustles less tied to global energy swings. And maybe, just maybe, use this as a nudge to rethink how dependent we are on volatile fossil fuels. Solar panels, efficient appliances, whatever fits your life.
Conclusion. Friends, the Iran war has shaken the financial world. Oil over $100, inflation fears, delayed rate cuts, stock drops, it's all happening live. Europe and major economies are dealing with higher costs and uncertainty right now. If you liked this, like the video, share it with friends, and comment, are you buying gold, energy stocks, or staying in cash? Next video will cover specific picks and hedging ideas. Stay safe, trade smart, and let's hope this ends soon. Take care.